Hello, everyone. Thank you for joining us for today's chat session, October 22nd, 2014. My name is Dean Rogers. I'm the Senior Analyst here at Kase & Company. And today we're going to start a four-part series on wave analysis or Kase Wave Analysis. Now, as always, we all know that trading is very risky. Anything that we talk about in these chat sessions is not any kind of consulting or advice. This is all for educational purposes. All right, so as I had stated a few minutes ago, or a few seconds ago really, over the next few weeks, we're going to go through a four-part series on Kase Wave Analysis. And again, that's going to be in four parts. The first part, which we're going to go over today, is picking waves. Then in part two, we'll look at calculating the Fibonacci wave projections. Part three, we'll identify the confluence points. That's the key to this entire analysis, is identifying the confluence points. And then part four, we're going to look at the Fibonacci projection trading decisions. And that's really looking at how can we apply this knowledge? How can we apply Fibonacci wave analysis and the Kase wave analysis of identifying confluence points with other technical factors to help us make sound trading decisions? Okay, so here are our learning objectives for part one, or today's session. At the end of this, we're going to be able to pick all of the most important waves for analysis by identifying the proper swing highs and lows, recognizing the X, Y, and Z portions of a wave, identifying the valid and invalid and irregular waves, and then knowing when to drop to a shorter bar length to gather enough detail so that we can see what's going on in the short run, and producing a list of the waves for future analysis. Now, what is a wave? When we're looking at a wave, really a wave is made up of 3 points. And sometimes you'll see us talk about this or others talk about this as a wave cycle. But really what it comes down to is there is an X, Y, and a Z portion of every wave. Now in an up wave, as you can see in the illustration on the top right, the X is the lowest swing, Y is the highest swing, and Z is the retracement. For a down wave, X is your highest swing, lowest swing, and Z is your retracement or pullback to the upside. Now, when we look at waves, there are really two portions to the wave. There is the impulse portion of the wave, which is the XY leg of the wave, and there is an impulse portion of the wave, which is the YZ portion of the wave. Now, the reason that we break this up is, as you'll see in the next, or part two of this series, we do wave projections that are based upon the impulse or XY portion of a wave, and corrective wave projections, which are based upon the YZ portion of the wave. Now, it's also important to know what a valid, invalid, and irregular wave look like. Now, when we're looking at waves, the previous cycle had shown for instance, with an up wave where the X, the Y, and then the Z was the pullback. Now Z held well above, in fact, if I go back to that slide, you can see that Z held well above the swing low of X. As long as Z holds X equal to or greater than X in an up wave, or Z is equal to or less than X in a down wave, that is a regular wave cycle. However, if Z were to go below or take out, and you'll hear me use that word take out a lot, if Z were to go below X, that takes out or invalidates the wave cycle. So in this case, in the wave up in the upper right illustration, Z falls below the X swing, and when it does that, that becomes an invalid wave. In the case of the down wave, when Z rises above X, it becomes an invalid wave. Now, I know this is very basic in some review, but one of the things that you'll notice, especially if you've ever studied any kind of Fibonacci wave analysis or Elliott wave analysis or any kind of wave analysis in general, is that sometimes, especially in Elliott wave, they will label a wave as an irregular wave. These are really rare. These are extremely, extremely rare formations. So an irregular wave formation would be what I'm showing here as an invalid wave where, for instance, in an up wave cycle, Z is below X. But it's just a situation where Z overcorrects. It basically has an overcorrection and right away starts to move higher again. I'll see if we can find some examples of that, of an irregular. I know that in natural gas, for instance, for the past several months, we've had a large irregular wave on some of the prompt month contracts. And so that's something that we'll be able to look at when we do some analysis going forward. But for right now, I wouldn't worry too much about irregular waves. It's one of those things that they're so rare, even if you don't pick it, it's not going to really be all that bad if you don't use it in your analysis. And it's usually pretty apparent when there's an irregular wave. And really when it comes down to it, like everything in trading and technical analysis and fundamental analysis and analysis in general, it's a lot of times in the eye. So if you think it's irregular and you think it's an important wave, then by all means include it. If you don't, that's fine too. All right, so there's no wave police. They're going to come to your house and arrest you because you misidentified an irregular wave formation. All right, so moving forward, let's talk a little bit about cycle labeling rules or wave labeling rules. So whenever we start to label waves on a chart and pick the waves for analysis, we have to know what valid, invalid, and irregular waves we're going to pick, and really when it comes down to it, what the valid waves we're going to pick, and where the X, Y, Z points of a wave are. And it's important to also know that any X, or excuse me, any Z of a wave can become the X of the following wave cycle. And I'll show some examples of that here in just a moment. Also, an X or a former Z can be attached to any subsequent Ys provided the Ys are successively more extreme. Now these two rules don't make a lot of sense without illustration, so let's look at the illustrations. So what I have here is a very simple chart. This is target daily chart where we're labeling the X, Y, and Z points of a wave. Now we start from the top here because we're labeling, in this case, down waves. And we're looking at X1 as the highest point, the 7350 swing high. So that is X1. Y1 would be the first swing low after that, which is 7055. And then Z1 would be 7207. So that is one wave. And if you look in the upper left, we have X1, Y1, Z1, or the 7350, 55, 7207. That is our wave. If I am typing these waves into a spreadsheet, I will type in those 3 points as X, Y, and Z. Now, from X1, we can also make a connection all the way down to Y2, which is at 6203. And then back up to Z2, which is 6725. Now you may be asking why we didn't draw Y2 down to 6305 and Z2 up to 6559. The reason is we could use a Y at 6305, but after 6305 we have to go to the highest high. Now the highest high is 6559 after that. Okay, the highest high before we make a new low. So 6305 connects to 6559. However, we go on to make a new low at 6203, which is okay, but in a future slide here, I'm going to show that once that 6559 swing high is overcome, that wave down to 6305 back up to 6559 is invalidated or taken out. Therefore, we're not picking it as a wave right now. So the second wave that we pick would be X1, Y2, Z2, which is 7350, 6203, 6725. Now, if we go back and we recall the rule that any Z can become an X for the next wave cycle or set of wave cycles, we can look at Z1 becoming X2. Okay, so the Z1, 7207, can also be used as an X, and we can pick down to subsequent Ys. Now from 7207 we go down to 6203, and then we pick back up to 6725. So here we've picked the wave X2, Y2, Z2. Okay, so far we've picked 3 waves coming down from X1 and X2. And you'll notice that we have 2 waves that have the same Y2 and Z2, or the 6203 to 6725 leg, or corrective wave. or leg. Now, you may also be asking why I'm not picking down from 73.50 over to the Y3 and Y4 at 63.32 and 62.22. That is because of the second rule where we said that from any X, which could have been a Z, we can pick any YZ combination as long as those combinations are becoming more extreme. That means that for us to pick more waves down from X1, they would have to be lower than the Y2 Z2 leg, meaning that we'd have to make a new low below 62.03. Because the 62.20 swing low and the 63.32 swing low are both above 62.03, we don't pick those waves. All right. However, we can take Z2 and make it an X3. And from that point, because the YZ portions of the waves down from X3 are more extreme, we don't have to worry at that point about making a low below 62.03 because that's in the past. So at that point, we can actually look at the combination of X3, Y3, Z3, X3, Y4, Z4, and then our X3 becomes an X4, so we can pick X4, Y4, Z4. So there we picked the 67.25 to 63.32 to 64.99, then 67.25 down to 62.20 back up to 63.81, and then 64.99, 62.22 up to 63.81. So when you're picking waves, you're going to notice a lot of times you'll have repetitive YZ or corrective portions of a wave. So on this chart alone, we picked 1, 2, 3, 4, 5, 6 waves. We have 6 waves from this very, very simple chart. So you can see how the combination, the cascades of X to Y to Z on a move down can build very quickly, exponentially, into a very large set of waves. So again, from this one chart, we picked 6 different waves that we would use in our wave analysis. And these are waves that I would type into an Excel spreadsheet and then later do the Fibonacci wave projections, look for the confluence points, and then apply that analysis to my trading decisions. Now, what waves become invalid or incorrect? How can we incorrectly label waves? Now this is actually something here. This is what I was talking about a little bit earlier, the 73.50 down to 63.05 up to 67.25. We may scratch our head and say, well, why is that? You know, you have an X, a Y, and a Z. The Z point doesn't overcome X. It's lower than X. It's greater than Y. It looks like a valid wave from what I explained earlier. Well, the problem here is that we go on to make a new low, lower than the 63.05. And so we can go down to the 62.03. We could pick the wave 73.50, 62.03 up to 67.25 like we did on the last chart. That's a valid wave. And actually, the 63.05 to 65.59 was a valid wave until the 65.59 swing high was overcome by the 67.25 swing high. At that point, we would have to pick the wave. One way that you can think about it, and when we're programming it in our algorithms for programming and automatically picking waves in the apps that we have like Kase Outlook and our internal XYZ picker that I use for my weekly energy analysis, what we look at is if you have a YZ, for instance, in this case, 73.50 and 67.25, you can look at the Y. You have to find the lowest low between those 2 points, which would be 62.03. So that's how you would algorithmically pick that wave, or at least an easy way to. Okay. In addition, on this chart, the 65.59, 62.03, 67.25 is invalid because the Z is greater than X. Same thing with 65.46, 63.50, 67.25. Now, one might say that those are irregular waves. Okay, you can make that argument. I wouldn't. I don't necessarily consider those to be irregular waves. I consider that to be a corrective move that was making higher highs and higher lows, but then ultimately broke to the downside. So, you know, again, picking irregular waves is really in the eye of the beholder. For the most part, 99% of the time, they're going to be invalid waves, in my opinion. Takeouts. So if we had a previous wave that was valid in the past, so we have, like we have up here in the upper right, we have an XYZ, where Z had held the X point, it was lower than Y, we had a valid wave cycle. That Z point, once it's taken out, once the market moves below that Z point, that wave is taken out. That wave is no longer valid, and that wave can no longer be used for analysis, other than to see what it may have projected to previously, but it can't be used for future projections. This also brings up an important point that those Z points, a lot of times, their swing lows in this case, or swing highs, are important support or resistance levels. And when those levels are broken, it can really shift the bias of analysis, or the bias of the market and the direction of the market. Very, very often we watch these prior swing lows and swing highs, even just on their own without applying wave analysis, to show that those are previous support or previous resistance. There's a reason that they held in the past. And for the major waves, the biggest waves on the chart, they're usually very important points, because by taking those levels out and invalidating the wave formations that led to that Z point, you're really shifting the dynamic of the market, or the market's shifting its own dynamic. And so that can be a big clue when you're doing analysis. And that's really something outside of the wave analysis, but that's something you should really pay attention to, something I watch very, very closely. Okay. Let's look at an example. Perfect example of a takeout wave on the charts that we've been studying is the move down from 73.50 to 63.05 back up to 65.59. That was a valid wave until the 65.59 swing high was overcome. The moment that 65.59 swing high was overcome, that wave became invalid, and from that point forward, we had to pick 73.50 all the way down to 62.03, back up to whatever subsequent swing high that was higher than the 65.59, all the way to the we had the 67.25 swing high, and then the market began to move down from there. Okay, and so we will continue to pick that 73.50, 62.03, 67.25 wave down until the 67.25 swing high is ultimately, or at some point, potentially overcome. All right, so that leads us to, or that's the basis of picking waves. I do want to spend a moment to show a chart and talk a little bit about dropping to lower bar lengths. This isn't something that you have to do, but it's something that I encourage you to do because it will increase the validity and the accuracy of your forecast, especially in the short term. Okay, so for those of you that aren't familiar with the Kase & Company websites, we have casestatware.com and caseco.com. You can get lots of educational materials and information there. Our corporate site is more geared towards the caseco.com. We also have a blog on that site now that we post these educational chats to, along with weekly analysis on various markets and various aspects of trading, hedging, risk management, and so on and so forth. You can also follow us on Twitter. I've become very active on Twitter. @Caseco is our Twitter. If you have any questions, you can post them on Twitter. Also, feel free to email me, dean@caseco.com, with any suggestions or comments, questions, or ideas for future chat sessions. So let me go ahead and share out my other screen here real quick. And I just want to spend a few minutes going through some very basic wave picking. Now, I'm not going to go through and actually show the Excel file. We'll do that next week. But if we look at waves, and we're picking waves on this chart, I would pick all the way from the 141.94 down to the 64.56, back up to the 106.81. I can pick 106.81 down to the lowest swing low. Well, actually, I could even take the 82.12, or excuse me, 81.95. So 106.81 to 81.95 up to the 103.66. Now you'll notice that from 103.66, we just have a move down to 79.10. That's because I'm on a weekly chart right now. All right, we don't have any detail Okay, I'm using our case swing indicator, by the way, to pick the waves. And I might be able to use a more sensitive case swing, like case swing 1, to maybe get some detail here on the weekly chart and pick some waves down. But even then, if I take the 103.66, 97.32, 100.35, 103.66, 91.66, 94.42, 103.66, 89.13, 93.82, 103.66, 79.10 back up to whatever this is here, which is 83.26. Now, I still don't have anything down from 93.82, this most recent move down on crude. So I can go to a daily chart. And on the daily chart, I can look at, so this is where the idea of dropping to a lower bar length, a shorter time frame. We're going to be able to get detail on that shorter bar length. Now, even here on the daily chart, down from 93.82, okay, so if we go back to our weekly, that's where we were looking down from 93.82. So I'm going to go to my daily, 93.82. I can pick a few waves in here, but there's really not a lot of detail still, even with case swing 1. So what I'm going to do, I'm going to change this to case swing 2. This is just for aesthetic purposes. And I'm going to actually drop into an intraday chart. Now, I can use time bars. I can go to a 30-minute chart, 15-minute chart, a 5-minute chart. That's actually what we do in our programs, because in our programs we can't use other bar types like range bars and case bars when we're pulling data from various data sources. We usually have to pull time bars based upon 1 minute, 5 minute, 15-minute increments. So that's fine. We can drop into lower bar lengths. But if you're picking these waves by hand, and actually when I'm cleaning up my waves for my weekend analysis on energy or any analysis that I do during the week that I post on our blog for Apple or IBM or Coca-Cola or all these things that have been in the news lately, what I'm going to do is I'm going to actually use case bars or range bars because it just gives me a cleaner chart. On crude, 50 cents, that's a pretty good intraday chart. Again, we're looking to pick waves down from that 93.82. Now you can see there's quite a bit of detail here. So I might even move up to something like a $1 case bar chart on crude oil here. And look how much more detail I have now. Now I can pick the waves 93.82, 89.97, 91.95, 93.82, 87.22, 90.56, 93.82 down to 82.80, 85.56, 93.82 down to 79.10 up to 84.08. I didn't pick 79.38 to 81.70 because 81.70 has been overcome. Okay, it's no longer a valid wave. So I can do that. Then I can pick all the waves down from 91.95. I can pick all the waves down from 90.56. I can pick all the waves down from 89.72, from 85.56, from 85.13, and then pick the waves down from 84.08. And if I wanted to get into more detail, down from 83.26, I can drop into an even lower bar length. I can go down to like a 35 cent. And then, I can start to look at, okay, what are the waves down from 83.26? Well, we really only have those 2 waves, and so on and so forth. Same thing goes with the moves up, with the waves up. All right, well, I appreciate you guys attending. For those of you that want to watch this or are watching this in a replay, if you do have any questions, please feel free to contact me at any